So you are looking to get into stocks and shares. This is my advice on how you can keep this entertaining for yourself and understand what you are watching to the fullest. As I know, in the best of times, understanding finance can be tedious and often confusing. Before we start this video, I would like to ask if you could please like and subscribe, as 98% of my viewers aren't subscribed currently. So what will we get into within this video? So this video will be split into 4 categories. The first one is how to remain entertained within the stocks and shares market. The second one is what sort of metrics should you be looking at and how to understand the basics of them, where you can find information online, and where my journey led me in the world of finance. So how do you stay entertained whilst looking at stocks and shares? As I know, at the best of times, it is often quite difficult to stay engaged with it. So personally, I do feel as if the best way a beginner can get into stocks and shares with no financial background is viewing the market as a almost sport. Often when you look up beginner videos on YouTube on the stock market, you are shown videos such as what each candle means. However, this is a very silly place to start, as it is often confusing and unnecessary. This is only necessary if you're going to be trading short term realistically, as you can compare the candles, say you've got an engulfing candle or not, so you can see whether or not the market is bearish. However, at a very beginner level, you just need to understand market goes up, market goes down. It is obviously very important to understand these eventually, but as a beginner, I feel as if it's too much pressure. So unless you want to be getting straight into day trading, which I really do not recommend in the slightest, you don't need to worry about these in the meantime. I only say that as I feel as if no one should be day trading unless you understand the market anyway. If you're just jumping in and looking at patterns on a graph, I think it's just gambling. There is no financial structure to that. There's no risk mitigation. It's just gambling. So before you do start day trading, please do understand the market to begin with. And that is exactly what we're going to be teaching you the basics of in this video, so you are in luck. So what do I mean by see the market as a sport then? In this case, we will picture Nvidia as Arsenal and AMD will be Tottenham. I think they're rivals, I don't really know football, but for this example, Nvidia is Arsenal and AMD is Tottenham Hotspurs. When a news article comes out about, say, Nvidia, in a positive light, you could see that as one goal towards Nvidia.
Back by Walker, De Bruyne's header!
As these companies are both in similar industries, this has a correlation to a degree. It's not always perfect, of course. If Nvidia has a positive news article, it's not going to affect the price of AMD massively. But when you're comparing the two stocks, it is important to see that they are competing, and different news articles, which could be anything from a CEO saying something to their financial quarter coming out, being either positive or negative, that could be seen as a point in the direction of either company. So if you are trying to get into finance at a very early level, I would say choose a couple companies which interest you. Have a look at who their closest competitor is and keep an eye on the news surrounding them. And that way you can make your own personal engagement on where the stock is comparing up against its competitor. And there are many competitors and stocks within the world of finance, so it isn't just limited to semiconductors. You can go into stocks such as Amazon or Apple or Samsung, which can compete with Apple. You know, there's just many companies which compete on a level with each other. And say, for example, recently when Amazon has announced their new semiconductor chips that are coming out, or they're in production, this had a knock-on effect to Nvidia stock, as people were starting to hedge their bets throughout the market more evenly instead of placing it all on Nvidia. So that is how I would view the market as a beginner. I would make it more relatable into something which I have knowledge on, such as football. I mean, I don't personally, but if you do, or even it could be F1 teams, it doesn't have to be football related, but you just see it as a almost, it's not a real competition, but you could see it as a competition. Okay, so now we are going to be looking at what metrics you should be looking at. These are going to be very basic metrics, so I'm not going to overcomplicate it, and I will explain what each one means. I will also merge in the third category with this as where you can find it, as they do match up. You need to know where you can find this sort of information in order to know what metrics to look at. So we'll start with that. So one of the most popular places for finding news related articles is Yahoo Finance. In the top here we have a search bar where you can search any stock, for example, Amazon. You then click enter and you can see all of the data for Amazon, and scrolling a bit further down we can see the recent news articles relating to them. So if you were to find a competitor to Amazon, you can also compare the two on this website using the compare feature. But essentially where you want to be looking for the news surrounding Amazon is just down here, or you can just Google it in the case of Amazon as it is such a large company. So looking on Yahoo Finance, we can see the different charts. YTD means year to date, so we can see from January this year, Amazon is up 35.41%. We have the PE ratio, which is price to earnings, and the EPS, which is earnings per share. You want to see these positive as it means that there is potential room for growth within the company. However, it is important not to base everything off of this, as it is almost speculative, kind of. It's hard to get into without making it complicated, but just understand that ideally you want to be seeing that positive. So now if we go onto the financial tab on the left here, it will be different on a mobile device. We can see their financial quarterly reports. So if we go to a quarterly chart, this will be a more accurate view. We have a TTM here, which is the trailing 12 months. That is basically the last 12 months combined, and these are the past 5 quarters. On the income statement, two of the most important metrics are the total revenue, which is how much money they brought into the company. And further down here, we have the net income, which is how much money they actually made after all of their costs, such as tax and operating incomes, were deducted. Moving on to the balance sheet, on a quarterly view here, we can see total assets. Down here, we want to look at the current assets and the cash equivalents. This is how much liquid cash the company has. And further down here, we have the total debt. If you divide the total debt by the current cash, you can see a liquidity ratio, which I will go into in a bit. And now on a free cash flow, we can see how much money they had spare at the end of each quarter, which can be used for paying out dividends, which is what a company will pay to their shareholders on a yearly basis, buying back stock in which had been sold to keep the price of the stock inflated, or paying out debt in which they owe. So now looking on my Excel sheet, this is very technical, but I will just explain it on a basic level. You won't have to do this, but we have the liquidity ratio, which we talked about, and I've put it into a chart here so we can see trend lines. We have the retention rate, which is how much money stays within the company from the income statement, and the free cash flow, which shows the money spare and the difference between the operating and free on a quarterly basis. And then down here we have exponential charts, which just show us another trend line. This is currently looking at SoFi technology, not Microsoft, and we can see a trend line here and the price. Further down here we have volume. Volume is just the amount of shares being traded from one place to another within a set period of time. This could be seen as either good or bad. It depends on where the price heads, but essentially it can prove high volatility, which again could be seen as good or bad depending on how much risk you want to take. Speaking of volatility, further up here we have a beta ratio, which will compare the stock price, the volatility, to the ETF in which it is situated in. In the case of SoFi, it is the Nasdaq. So if it is a positive beta ratio, we can see that SoFi Technologies is more volatile than the Nasdaq, which could either be seen as good or bad. So where can you start to invest? If you are looking for just ETFs, I would recommend Vanguard. If you are looking for any other sort of investment / trading, I would say either Plus 500 or Trading 212 if you are a British resident. I'm not sure about the American version of these, and I am not affiliated to these in any sort of way. This is just what I have personal experience through. I personally use Trading 212. However, this is not a requirement for anyone. You can use whatever sort of service you would like to, whatever meets your needs the best, essentially. So what did I do to get into investing? Since a young age, I had been trading on fake money accounts. This is where you can invest in either an invest account or a CFD account. A CFD account is a contract for difference account. This is where you will be using leverage. This is often used for a day trading basis. However, I would not recommend using this at all with any of your money at an early stage. It's alright to try it on a fake money account. However, I definitely wouldn't recommend it at all. If you do not understand what you're investing in, you will just lose all of your money. It's just effectively gambling at that point. But I would recommend using a fake money account on the 212 Invest or similar platform, as this will allow you to see in real time what is happening within the markets and keep up to date with prices. And you can have a go yourself to see if you are profitable or not based off of the research in which you conduct. And after many months or even potentially years of doing this, you might actually see good returns within your fake money account, and you might be tempted to move into a real fund account using your own personal money. However, it is important to say you should really understand what you invest in before you do. I am not a financial advisor. None of this is financial advice. This is just my own personal opinion as to how to get into this at an early stage. So I do hope you have found this video useful. Please do consider liking or potentially subscribing, as it would be greatly appreciated. Any questions, I will happily answer them in the comments. With that being said, please do like, subscribe, and I'll see you for the next video.